2 are gone, and I can now do GU, and I'm going to try to do it really quick because, the thing is, this type of analysis of like what Andrew does of like, or did rather, because he doesn't really do it anymore, which is a bit odd, but like, he does to some degree, but just not as like distinctly identifiable of like, yeah, okay, that's definitely what he's doing. But anyway, yeah, so if you start on the monthly and you assess all you're doing is assessing where the most recent bar closed relative to whatever time frame that is, closed in the formation it did, or in the fashion it did, or in the way, however it closed, like amongst whatever existing in play and pushes region of that push, it closed the way it did, meaning like, is it at the highs? Is it at the lows? Is it at the overextended region? Is it at the healthy kind of quantity, sufficient price coverage, spanning above previous and push or below previous and pushes range low, or vice versa high? Whilst, for example, the most recent bar close had formed however it did, signifying / signalling how that push in play is supposed to continue, right? So this most recent bar close relative to the monthly, it closed as with a decent wick rejection at the highs of its current push to the upside. You also bear in mind identifying where the most recent bar closed. Here's a prime example with what I'm about to say. So you're basically identifying where the most recent bar closed the way it did amongst whatever the most recent prominent push has been that's been in place. So here, yes, this is it's soon likely to result in a reversal push and a new push to sort to take hold and be in play. But this most recent bar close, there's not really a push that's in play from here. But where's this most recent bar close sat amongst whatever the most recent prominent push has been that's been in play? It's this. A very overextended push to the downside comprised of a sufficient kind of quantity and quality of each bar, the way it formed in terms of the price coverage per bar, and spanning beneath previous and push range low. And then you're getting a wick rejection here, showing wick rejections at the overextended region of push to the downside, and then you're getting bullish bars closing at that low end region. But it's kind of just at the bottomed out region. It's not likely to follow suit with a reversal yet, based on like this bar close not really forming in the way that would show that yes, a reversal could take hold from here after like a overextended push to the downside, wick rejections at the lows, then bullish bars close, and then you get a nice bullish bar close that signifies the confirmation signal, basically bar close that signifies yes, the reversal is likely to take hold from here relative to the time frame, and therefore that whatever direction that is that next bar is poised to primarily push in is likely to be the direction we primarily see the market take in over the course of the next relative time period. So it doesn't mean that, for example, from the inception of the next monthly bar, it's likely to just ramp higher. No, it just means that over the course of that next monthly time period, the gradual direction we see, meaning like over the course of that month, is primarily to the upside. And then basically after that, you would assess where that bar closes amongst its push, how is it forming the way it is. So anyway, that will start from that here, and I'll stop rambling. But so here you see that this push, that this recent bar close where it's sat amongst the current push what's in play, it's kind of got weak rejections at this high end region, and it's kind of iffy as to what way momentum from this point is likely to follow suit / follow through as. In terms of there's not really a clear signal as to how next bars are likely to form. From this point, in fact, you would kind of want to wait for how the next bars close, just like you do with Euro. You'd want to see whether there is momentum at this high region of this current push what's in play, or is there starting to be signs of wick rejection showing from this point on top of this wick rejection. And then if so, then the market's likely topping out relative to the monthly, and then it's likely to start to see like bearish bars closing after that bar, right? And then you'd be waiting for the confirmation signal for the reversal on the monthly though, so you're obviously going to be waiting a hell of a lot of time for that. But the thing is, you don't even need to know what's going to happen really relative to the monthly. You just got to be aware of where the market is sat at with regard to also how the most recent bar closed the way it did amongst whatever region of that in play out and push. What's the most prominent push that's in play? Could be the in play, could be the most recent push that was in play, that the market is sat at universally being prices which are sat amongst that region of that monthly in play and push, with however that most recent monthly bar close like amongst that region of that push, right? Like, for example, in this given case, it's kind of at the high region of the current monthly push that's in play at the upside, meaning prices in this vicinity, what the market is now trading at. And obviously, the context of how they're supposed to be interacted with in terms of the contract placed at this vicinity of prices relative to the monthly doesn't really hold any impact on the in European modern trading session, because that's just 3 hours, mate. It's like, it's absolutely, it's just pittance relative to the monthly. But if you've got a monthly kind of iffiness direction and a bearish bias, it does give you a bit of context, and it's just good to be aware of. Um, anyway, you then drop down to the 2 week, and you got a overextended push to the upside above previous and push range high, a healthy candle quantity, very sufficient price coverage per bar, leading the push to be overextended, and then you kind of got some signs of wick rejection showing, and then you got wick rejection showing again at the overextended region of this push and play to the upside. And it's basically a bit iffy as to how momentum from this point relative to this push what's in play is likely to unfold as from this point, because you've got wick reject kind of closes at the overextended region of a push that's in play to the upside, signifying that there's no more momentum left, and basically you kind of just want to look for bearish bar closes to signify that yes, a reversal is nearing. But basically from this point it's kind of iffy, apart from the market's wick rejecting at the highs or at the overextended region of the high end side of the push that's in play to the upside. So it's just basically an iffy territory. You sat right over extended prices, which is also wick rejecting, meaning that a reaction is likely to take hold. But it's not really sure. You cannot really be sure when that is yet, based on the structure of how the most recent bar closed the way it did amongst the region. That's all you know, right? Which is it closed as a doji at the overextended region of a push, which did somewhat start to show signs of wick rejection, and then you get a doji bar close such as that. It's like, and then with also a wick rejection, it's like, yeah, a reaction is likely to take hold soon. But obviously it's not really, you can't really say much relative to solely looking at the weekly as to what's going to 2 weekly is what's to unravel. But yeah, it's likely to be weighted bearish, basically. And then anyway, the most recent weekly bar close, you just see this wick rejecting at the topping out region, basically even more. You just at the overextended region of this newly in push and play that unraveled to the upside, which then the market started to wick reject and nice bearish bar closes at this overextended topped out region of where wick rejection started to unravel. And then again, you got a wick rejection. It's just likely to wait. You're just basically waiting for when that move to the downside is, and a retrace / reversal is likely to take hold. Basically at this point. And then the 3-day, you've kind of got a short-term push to the down. You kind of got a short-term push to the downside unraveling here, and then doji, and then like this, and then you kind of got wick rejection to the low, so you kind of want to be aware of that. 2-day again, short-term push to the downside, wick rejection. It's at the very lows of its push to the downside, which hypothetically is overextended, because you got this push and play what unfolded, which is in one candle, being a very short-term push and play at the upside. Wick rejection started to show, and then wick rejection started to show, and then bearish bar close, signifying the reversal. Yes, it took hold, and then this started to show wick rejections again, just iffiness behavior, and it's likely that it could push higher, possibly. You also have to consider the region or the contextual position of where the market's sat at in terms of at the next higher time frame, with regard to how prices in that vicinity over this next weekly bar are likely going to be interacted with, which you can't really have so much of a say on, but you are aware of the market is sat at the right overextended region of prices. The prices the market's currently sat at are prices that are sat at the overextended region of the weekly push that's in play and 2 weekly push that's in play to the upside, with wick reject doji bar closes closing right at the highs, where you're basically just waiting for a nice bearish bar close to signify yes, the reversal is likely to take hold from this point, and then the retrace is going to unravel. Then anyway, the daily, This kind of shows some bullishness, to be honest. You got wick rejection. You see the structure a bit more prominently. It's a bit more defined on the next step lower time frames, of course, because you've got more bars to look at. Meaning you can see structure more intricately of what actually structure is comprising this bar, and basically what what actually the reality of the structure comprising this bar. Which, for example, in this daily bar case, you would be able to get the reality of the structure comprising this bar on like the 1 hour or something, but like, or even that, yeah, whatever, like the 8 or something. But then anyway, here you got a push to the downside, healthy kind of quantity compared to the previous atom push that was in play. Wick reject, doji bar close at the highs, just waiting for a nice bearish bar close. You don't really get it, but you do just get the move lower. Sometimes you'll not get that like nice bearish bar close, and then you can say, okay, yeah, from this point the reverse is likely to take hold. It can just like kind of get that wick rejection and then play out in the procedure of like Foreman, and it can just play out within a bar, and just come into effect. And then anyway, you kind of got wick rejection starting to show at the overextended region, and then again here, wick reject, and then bullish bar close, but you kind of got like a wick reject to the upside, which you would want to see what sort of structure comprises this, the reality of this structural makeup of this daily wick rejection to the upside, because like, I mean, the prices the market like sat at here, it involved like participants no longer being willing to buy this region, but then also you kind of got the wick rejection at the lows, and then basically you all sat at the low end region of a push to the downside. Let's just check the charge. Yeah. But you just kind of want to see that. I mean, you're obviously trading European and modern trading session, right? So this wick reject could like push lower, and then like you could be caught on the wrong side, and then it could start to go higher. But anyway, 12 hour you got like short term SST structure in play and pushes forming, where like the intent traders have isn't being maintained for very many time periods relative to the chart perspective being looked at. And then it just forms short-term structure. So you got a push to the downside, wick reject likely to follow suit with a reaction soon. It's at the overextended region, healthy kind of quantity, decent price coverage, and then you get that reaction, you get a nice bar close. So you kind of got a wick rejection, which you would kind of want to be somewhat aware of. Anyway, with next step lower time frames, you could have probably foreseen this coming, possibly based on how the structure was set up on next step lower time frames, with regard to, like, for example, how the most recent bar closed relative to time frames below were forming the way they were amongst their pushes. For example, this could have been like a nice overextended 2 hour push to the upside with like a nice 2 hour wick rejection at the highs, and yes, it's likely to follow suit with a reversal. Anyway, you got this push to the downside and then wick rejection at this region, with the daily also being kind of poised, wick rejecting at the very lows of its push to the downside, possibly pointing for a reversal. So you really want to be aware of this. And then anyway, you kind of sat at the lows still, with regard to the 8 hour, but then you kind of also got short-term structure. But then this wick rejection you'd want to be aware of relative to like how the 12 hour setup. Same here, but like, you kind of set at the highs of like a doji wick rejection to the upside, forming at the overextended region of the 7 hour push. 4 hour, again, you see that 7 hour push structure more intricately. You kind of wouldn't really want to see a very sufficient push down to around here today. Based on like where you're sat at relative to 12 hour, you're wick rejected, you're all likely to possibly react from here. But first, it might be likely that the pushes lower here, because look, you got to push to the downside. You're at iffy territory. You've expanded in one candle beneath previous atom push range low with a very sufficient price coverage. It's in a very abrupt price change, meaning like participants may no longer be willing, which there is a sign possibly showing this with this wick rejection at the very lows of the overextended push to the downside, which participants may no longer have the sort of conviction that would sustain momentum moving to the downside with regard to, in this case, 4 time periods. Anyway, you get this nice bullish bar close reaction basically, and then again short-term structure might be unraveling here. You get a wick rejection at the highs of its push to the upside, and and then you start to get like wick reject doji kind of closes at the very highs, basically just kind of topping out at the highs of its push to the upside, showing that there's no momentum, and then basically you're just waiting for that nice bearish bar close that signifies a reversal. You kind of are overextended with regard to how like this kind of quantity of this push, and you sat at the very lowest wick rejecting. You just want to see a very nice 1 hour bar close at the appropriate fib pull, so you can measure that yourself, because I need to close this here to here.